Hi, Mark Gordon with GoldenTicker.com on Sunday, September 25th, 2011. And it is about 4:20 Pacific Standard Time. And looking at the opening of the gold market here, early opening is we're pretty stable here. No big drop so far. They did raise the margin requirements for gold and silver and copper. So some traders were expecting some sort of a further sell-off, but right now we're stabilizing. The red line here was Friday, and here's the close Friday, and here's the open here on Sunday evening in overseas markets. And looking at a weekly chart of gold, we were down 8.41%, massive drop, $152.60 drop. Slicing through this blue line, the 10-week moving average, and just keep on plunging down here to the 20-week line and getting a little bounce up off of that. Volume did pick up for the week, so nasty week in the gold market. Now, of course, gold did have a massive run here and then topped out 3 weeks ago here at $1,923.70. And this is a correction that was overdue. We got way up past this upper trend line here, up into rarefied air, I call it, and a correction was due. This happened to be a very short, swift correction. Now, looking at the previous corrections in gold, we corrected back here in mid-June, coming all the way down here to the 20-week moving average and then bouncing up handily and starting another big massive run. And then looking back here into March of this year, same thing, pull back down to the 20-day, and actually the 10 and 20 days met here, got a correction there, pulling back and then rallying to new highs here. And then back here at the beginning of the year, another pullback, undercutting the 20-week moving average and the 10-week, falling down, supporting this lower trend line, never touching the 40-week, except way back here in July of last year. So the uptrend in gold is still intact despite this correction. Now, I like to put things into perspective by looking at a monthly chart. And a very simple formula is that when a market gets below this green dotted line, which is the 20-month moving average, is said to be in a bear market. Well, we're way above that here. In fact, we've been in a bull market here since 2008. And you can see I've drawn a upper trend line. You see this gray line that is moving up at almost a 45-degree angle. In the past, when we've gotten up to that line, we have had sharp pullbacks. And we didn't quite touch it recently, but we got pretty darn close and got a pullback. Now, if you look on a monthly chart, we still have not undercut the lows of last month. And we're getting support here at the 4-month moving average. So it's sort of basically just giving back all of the previous month's gains here, just a reversal correction here. So nothing really to worry about yet. Now, a correction back to the blue line, which it has done ever since starting this bull run back here in late 2008, has been to touch this line, the 10-month moving average, and then rally back up. So if we were to touch that line, it is currently at $1,532. So I would expect if the correction is going to continue to come down there and test that, so that another $100, $130 lower than we are now. Now you see this gray area here. These are the Bollinger Bands. And when you get outside of these bands, they tend to come back within the bands, and that's what's just happened. The Bollinger Bands are mathematically designed to keep prices within them 95% of the time. So a pullback back into the Bollinger Band was to be expected, and a correction taking us down to the 4-month moving average was to be expected. So looking at a longer term chart, we can see that gold is still healthy and still running higher. And looking now at silver on a weekly chart, we can see the destruction that happened last week. One of the worst weeks ever in silver, down 23.5%, slicing through all key moving averages, coming down below this gray area, the Bollinger Band, on a pickup in volume. So just a horrible week. Now we've lost support of all the key moving averages and the previous lows here. So nothing really to support silver except the round number of $30 here, which we could hold. We'll have to see on Monday if we can stabilize down here. Now it looked like that silver was forming a cup here and continuing a nice rally, but broke through all these trend lines here and we're now in a solid downtrend. But believe it or not, we are still up for the year. We got to a low of $26.30 here in January, and it looks like we opened January at about $29. So still up for the year, even despite all this. Now, looking at a monthly chart, let's put silver into perspective. We are still above the green dotted line here, which is the 20-month moving average. So we're said to be in a bull market in silver, which we have been in since mid 2009, and we haven't even bounced off of this yet. So we could come down here. That moving average is at $28.35, and you can see we came back down and tested that 20-month moving average back here in early 2010. And throughout 2010, 2011, this blue line, the 10-month moving average, has been a support level, which we did slice through here this month. So a little bit of technical damage here, but still in a bull market. You can see in this monthly chart that silver formed this cup with handle formation here, broke out in 2010 at about $20 and ran straight up to almost $50. So a huge move here. This is part of the correction of that move, I believe. And usually when you have a big run like that that goes vertical, it's very typical to give back half of that run. So that would be about a $15 pullback up off the top, which is kind of where we're at now, somewhere in that range. So I would expect support in this area, maybe even down here at the green line. But you never know. Could correct even further. But so far looking like a correction of this big move. And in relation to gold, silver always takes a bigger hit. So we're in a period of extreme volatility, especially in the gold and silver markets. So expect that. Expect hard, fast hits and swift corrections like we're going through now. This is going to happen in the future as well. So be prepared as a trader.